Hello there, you're watching Your Trades on ET Now with me, Sneha, and with me as always is Priyanka Uppal. And Priyanka, well, to sum it up, all's well that ends well, right?
Absolutely.
What a recovery we've seen coming in on the markets today, a much needed cheer that the street was expecting. That's something we've seen today, and very good move coming in from Nifty, Sensex, more than 2% each on an intraday basis. But if you take a look at how the indices have performed on a weekly basis, it's been rather mixed because we've had some reactions coming in over the course of the week. Some major Nifty 50 names were impacted due to some regulatory decisions as well. However, nonetheless, you have Nifty and the broader markets that have ended the week in the green. You have Nifty that's up 1.5% for the week, mid cap 1.8%, and small cap just about 1% gain coming in, despite this being a truncated week due to the Maharashtra Assembly elections. But let's take a look at some sectoral winners and losers over the course of the week. You have Nifty Realty. Surprisingly, that's your big sectoral gainer because that has been seeing some consolidation over the past couple of weeks, or rather months, and on the back of some soft quarter 2 numbers as well. 6.2% higher week to date is where Realty has closed, followed by Auto, IT, FMCG, Bank, Pharma, PSU banks, and metals in that order. Metals very nominally in the green. However, what slipped into the red for the week entirely, 1.5% lower. Nifty Energy is the index that has closed with 1.5% cut coming in on a weekly basis. Other than that, you have all your other sectoral sectors, in fact, that have closed in the green. If you take a look at some Nifty gainers, you've Power Grid, M&M, Ultratech Cement, and JSW Steel that have outperformed the entire market breadth. However, on the flip side, no surprise over there, the Adani Group stocks, Adani Enterprise, Adani Ports, some of the biggest losers on the street, as well as SBI Life and BPCL. So while this was the news coming in, this is how the markets have shaped up for the entire week. You have FII outflows also that continue to weigh on the market. So this is something that is dulling the sparkle that the market saw today. But well, we can only hope for this rally to continue, isn't it, Priyanka?
Absolutely. Let's hope. At least what we have seen is that the largest intraday high in last 5 months. In fact, yesterday's headline was Nifty had fallen to 5-month low overnight in just one trading session. Lot has changed, in fact. But then lot has changed also in terms of currency market also. What we've seen is dollar index, which is the biggest worry for emerging markets, especially markets like India also. Now this one has surged 107, and it's near to 13-month high of 107.15. That one is, of course, a worrisome data to look at. Rupee also fell to its all-time low of 84.49 today. A lot of cues coming in from US markets on macro front. In fact, Bitcoin is on a tear. We've seen it rallying this week itself. In last 2 weeks only, Bitcoin has surged 40%, and now we're very near to its one of the biggest milestone, $1 lakh also Bitcoin. That's what major cues coming in from if you talk about the currency market as well as a different asset class like. But then what a day in markets today. A lot of stocks, a couple of stocks would like to mention here. Raymond stock, which was up by 19% today after exchanges issued a non-objection certificate letter to demerge, for a demerge between Raymond as well as Raymond Realty. Praj Industry, that one popped nearly 18% after they guided for a 3 times revenue growth by 2030. And of course, they're talking about the opportunities coming in from sustainable aviation fuel and of course energy transition. That's the bigger one. But the top gainer on the index was SBI also. And now even experts are viewing financials as a sector which could participate in the leg up rally from here also. SBI gained 4.5% after a bullish report which came in from Jefferies. And if you talk about other key highlights for the week, of course, we have to mention about the city gas distribution stocks. That one saw a good, that was a good plummeting, a good downside coming in for stocks like IGL, MGL. They were lower by 2%, what we've seen after announcing a further cut in domestic APM gas allocation. And of course, from primary market, we had an action. We saw an action coming in for NTPC Green Energy IPO third day. And if you see for QIB side, it has been subscribed by 1.5 times. Of course, the final data would be compiled by the evening. But then a lot of action, what we saw, where from closing or giving a gain of flat returns on Nifty to posting a single largest gain on intraday basis in last 5 months of more than 2% on Nifty. We've seen a lot. Now, what do this journey means? What do this rally means? Now, To talk about the fundamentals as well as the technical view on markets right now, we're joined in by two special guests. We have Rajesh Palvia to talk about the technicals, and Mayuresh Joshi will talk about the fundamental aspect of the market. Good afternoon to both of you. Welcome to Your Trades. This is a weekly edition wherein we try to gauge that what lies ahead for the coming week also. Mayuresh, first coming to you. The kind of recovery we've seen, it's more of a rebound rally because we were, of course, in an oversold zone. FI's positioning was not changing from more than 25% on the index future. We've seen a good rebound coming in, but are we out of the woods? Because, the major ones concern, the real concern which is coming in from dollar index or on the macro front or on the geopolitical, they stand tall.
Afternoon, Priyanka. Afternoon, Rajesh. No, I think all these concerns are very, very valid, and all these concerns are playing out on emerging markets, including India. So I think it's not just India who's facing the brunt of FI outflows. I think emerging markets are facing a similar trend. What you've seen in terms of the 10-year yield movement in the US, the equity risk premiums for emerging markets obviously have narrowed. And therefore, the outflows that we've probably seen for the emerging pack was consistent across markets that we probably tracked. To top that up, I think the earnings season, Priyanka, was not great. I think you've heard a lot of commentaries where urban consumption has gone down, is expected to remain soft. A lot of sectors have produced soft numbers as well. I think there were only a few pockets within the entire universe. A few banks, a few NBFCs did well, a few agrochemical companies did well, and a few infrastructure manufacturing companies performed relatively better, and their commentaries held out as well. So I think if you combine both these factors put together and add to that on what geopolitics can probably add, I think the volatility in the markets can very well continue. Yes, today was a surprisingly pleasing day for the markets after days and days of outflow that we've seen from the FIs and the fall that we've probably seen. But in my opinion, I think the markets might get stuck up in a range. You might see a time and a price-wise correction and a consolidation for the markets.
View coming in, Rajesh, I also want to get in a sense from you on where you are seeing markets going heading into next week, because if I take a look at the technical setup, yesterday we were seeing some resistance at 23,500, and just today, in this rally that we've seen today, we've crossed 23,900. So what is the next resistance level that you are spotting on the markets? What is the next support level that you would advise our viewers to also keep an eye out on? And do you concur with Mayuresh's view that despite this rally that we've seen today, there are still certain factors that will continue to ail the markets before we have a reversal and before the good days are here to come?
So after almost weakness of 7 week, this is the week where we are closing in the green. Substantial buying action throughout the day we have witnessed in the today's session. Looking at the data setup, we have now managed to close above again 200-day moving average. So that is the first positive sign in this recovery. But yes, on the higher side, the major call concentration, which is placed at around 24,200 strikes, that needs to watch in coming days whether we able to take out these levels or not. If we crosses 24,000 level on a closing basis, then there could be another round of short covering we could see in the market, and then really can extend further. But looking at the action in today's session, that is clearly giving some sign of extension of this rally in the coming week. The way most of the sectors have recovered and short covering action was there in most of the stocks on the large cap front, that giving us confidence this really can extend to 24,200 to 24,300 level. So I think until Nifty is holding about 23,600 mark, I think one should now hold the position which they have bought in this decline, and I think really can extend to 24,000 and 24,300 in the continuation of this up move. Bank Nifty is again managed to hold above 51,000 level on a closing basis. So here also there is a sign of furthermore extension of rally, and possible rally for Bank Nifty can extend to 51,600 to 700 zone. So our stop loss for holding the position in Bank Nifty and banking stocks is at 50,800. If these levels are held out by the market in coming week, I think really can extend for Bank Nifty also. But the leading sector where we feel that extension of rally would be there, IT, pharma, and real estate. These three sectors are clearly showing good traction in terms of buying. So I think these three sector can give more support to the Nifty to, move further higher from the current level.
You see 24,200, 24,300, nearly 300 to 400 points up move on Nifty, as well as on Bank Nifty also. You see that there is more room to this rebound rally. In that case, Rajesh, you have indicated two spaces for us. You've spoken about pharma. And but what about sectors like IT, which have been a clear outperformer? Will that be a possibility, or is it right to say that the sectors which have felt the maximum heat, who've got a maximum drawdown, they would be the ones to recover faster? In that case, will energy stand at that point? Even spaces like energy, reality you spoke about, but what about energy?
Yeah, definitely. So energy is also in oversold trajectory. So some recovery, yes, there would be some recovery. In again in today's session also some recovery was already there in some of the power stocks, energy stocks from the lower level. So I believe that yes, if Nifty continues further upside, there would be short covering in these sectors also, which are already in oversold trajectory. Sector like FMCG, sector like cement and energy basket. So I think here also we could see some traction towards buying side. But yes, those who wants to play the momentum, I think IT, pharma, and real estate, these three sectors are clearly showing good momentum. So I think here outperformance would be there. Recovery would be there in PSU banking space also, because most of the PSU bank have shown good recovery from their recent low. So that basket can be also looked at for near term trading perspective.
Okay, Rajesh, thanks for that view coming in. And gentlemen, stay on with us because we'll be continuing this discussion just on the other side of this break. Viewers, will be right back. We'll have both Mayuresh and Rajesh staying on with us. You stay tuned as well, and see you on the other side of this break. Hi there, welcome back to Your Trace. Thanks so much for staying tuned to ET Now. Mayuresh, coming to you now, over the course of this week, even though it's been a truncated week, we've seen quite some regulations coming in. You've had the new regulations coming in for PSUs for their stock split, their dividend, their bonus issue, all of these coming in from SEBI. On the other hand, we've seen some revision coming in the F&O basket as well in terms of the stocks as well as the size revision also. So tell us, are you seeing any near-term impact coming in from both of these events? Do you think these could materialize into something significant as we head into trade next week?
I think if you probably look at the construct specifically for the PSU space as a whole, I think it should obviously lead to better times for investors as a whole. And the second aspect within the PSU universe itself, PSU banks as an example, excellent set of numbers. What they probably delivered in terms of advances growth, they've got a very, very sticky and a very solid deposit base. I think the deposits should grow at a decent pace for them as well. Asset quality pressures at an all-time low. You're probably seeing NIMs not coming off as expected. In fact, for a few banks, the NIMs have actually improved quarter on quarter. Provision coverage is quite large, and therefore I think any recoveries that probably happen come directly onto the bottom line. Valuations also not expensive, in fact, very, very attractive as we speak. And therefore EPS, RS rating, institutional holding, what we see in canceling, probably in favor. Bank of Baroda, Bank of Maharashtra is something we continue holding in our global portfolios. Along with that, I think a lot of the defense meltdown that you see in PSU stocks, if the numbers start coming back, and in our opinion, they should by the end of stickiness in numbers at this juncture. But if they correct further, my own sense is that the risk reward probably becomes even attractive for the PSU. As a basket, I think the CPSE ETF probably a good time for investors who have not invested to start having a sip done in that.
All right, Rajesh, let's quickly come to you. Since we've spoken about many of the sectors which could see a good rebound from here also, and probably a more room for rebound on the index also, but give us a sense of specific trades also which you want to recommend to our viewers.
Three trades at this juncture, Priyanka. First one is from IT. Tech Mahindra is looking very bullish. The way stock managed to give breakout on daily, weekly time frame I think here we could see furthermore upside in the coming week. Possible target towards 1815 we can see in Tech Mahindra. So again, a very strong setup. A long built up is there in data. So Tech Mahindra is buy with stop loss of 1700. Another stock is from the real estate space, that is Godrej Property. Stock is in uptrend since last 4-5 trading session. Despite market was going down, but this stock has already formed a base uh, uh, in the last week itself, and we have seen very strong rebound from the recent low. The way stock is showing strength on the near-term chart, stock is now holding about 20-day moving average. So Godrej Property can be looked at for buying side. Upside target we are projecting towards 29.20. Keep your stop loss around 2815. And the third stock is Titan. After a significant correction, now stock is forming a bottom in the near term basis. On the weekly chart, there is a strong reversal. We believe that Titan can extend its gain. Possible target towards 34.40 we could see in near term. So Titan is buy with stop loss of 3265.
Specific trades are here. Rajesh is bullish on these particular trades. Viewers can note down of the targets as well as the stop loss. Mayuresh, coming to you for one last quick question. What we understand was the biggest drag on the Indian markets was also because of this, the slowing down in the earnings cycle. They've started to slow down, and Q2 was a surprise. Now, experts are even talking about, there could be pain more ahead also. And if you talk about the segmental, look at in terms of the sector, we've seen the commodities sectors like cement, oil and gas, or maybe chemical. They were the biggest draggers. And these are the sectors which are economy facing sectors also. So would that mean that, as soon as the aggressive government spending comes into picture, then, the momentum or the sentiment for these sectors starts to improve?
Oh, absolutely, I think, and that becomes a base case scenario, right? Because I think the government CapEx will come back well and truly in the second half. They've had a huge budget allocation done in the previous budget, and therefore you'll already see green shoots of that probably happening, and private CapEx expected to come back. So to a certain extent, what we've seen in the numbers so far, I think select BFSI, select agrochemical stocks that I mentioned, good monsoons is what we have witnessed. Reservoir levels are uh, extremely good at this juncture, and therefore the Rabi season should well and truly be very, very good as well. And therefore, domestic agrochemical stock should continue doing well. On infra and manufacturing, again, the entire focus in terms of government capex coming back, and therefore some subshoots within these sectors, including cement as an example, can start doing well. In our opinion, again, I think these four sectors will continue doing well from an earnings perspective. Selective banks, selective agrochemical companies. You've probably got some select infra companies which have delivered strong set of numbers. And within manufacturing, a subshoot of that, select cement stocks will continue doing well.
Thanks for that outlook coming in, Mayuresh. But on that note, I'm afraid Rajesh and Mayuresh, we'll have to let both of you go. We're completely timed out on this edition of Your Trades. Thank you so much for joining us and sharing your views with us and our viewers. But viewers, on that note, it's a wrap on the weekly edition of Your Trades from Priyanka, me and the team that put this show together. Thanks so much for watching. We'll see you on Monday.